So are we due for a recession in 2020? Okay, how many people think the market is going to go up this year?
Which market?
Our market.
The housing.
Our housing market, yes, not the stock market.
I think it'll go up.
You think it'll go up? Up, okay. How many people think it'll go down? Nobody thinks it'll go down, okay. It's okay. I mean, I'm not gonna hold you to it. We're recording you, so so maybe we will. So uncertainty, I think that's the big name of the game for many people right now. Is there's a lot of uncertainty. Why is there a lot of uncertainty? What is everyone worried about? Everything, right? Here are a few examples. So talk about recession, impeachment, and I'm not going to go into politics. The election happening this year, stock market, possible correction, the global economy is a big thing. Different policies. GSE patch that you see here, that's for the government-sponsored enterprises. So that's Fannie Mae, Freddie Mac, if you've heard of those, and they will buy up the government, and they're tied to the government. I'm trying to do this very quickly. They will buy up loans, basically, from the mortgage lenders. So all of that, there's talk about those being privatized and a bunch of different things, which I will not get into. There is so much in the news. If you put in real estate on your search, and whenever I go to Google search, it's just like every day the market's this, it's good, it's bad, it's just so many different articles out there. How is what going to affect the market? It's just uncertainty again, and then in terms of privatization of the GSEs, people are not sure what kind of impact it will have because it depends on what the private sectors do with the loans because what they're willing to accept. So right now, Fannie Mae, Freddie Mac, they have certain standards for the type of loans, the type of mortgages that they will buy. And because they're connected to the government, there's some amount of control over what those standards are. So we don't know what will happen. If it gets privatized, will that be good? Will it make it easier to get loans? Will it be a free-for-all and you'll start getting these, strange loans again? When I started in 2008, I had people coming to me and saying, oh, it's so hard to get a loan now. And I said, what's hard about it? And they said, well, you have to show all your paperwork. Okay. And they said, a few years ago, you could literally, you go and I would hear different iterations. People would say, they would ask you to breathe on a mirror and it fogs up, they'll give you a loan. It was literally like that. Or you would have somebody who would, have a small business and they would say, I make $1 million a year, and they would just take their word for it and give them a loan. So those kinds of things, people are not sure really what's going to happen, and it just adds to that uncertainty of what will happen. I think depending on, depending on the governments, there are efforts for more control, more regulation, and then there's the deregulation, going on. And so there's a balance between those two. And that can impact how easy or hard it is to get a loan, what kind of loans are available, and whatnot. So I hope that covers it. So are we due for a recession? Again, this is the slide that I had before. That was last year. And in general, the predictions have gone down. So now there are less than half who think we might be going to recession this year. Most people think not. So at least for the beginning part of this year. Possibly next year, but even then, people are very mixed in terms of how much they're expecting it to be. It could be just a correction. And in the last 5 recessions we've had, during 3 of those, the housing prices actually went up. So just because there's a recession doesn't mean that everything is going to come crashing down. The 2008 recession, where it did come crashing down, part of it has to do with the fact that the recession was caused by the housing market, right? So there was already that dynamic going on. It wasn't that the recession caused a housing market problem. So, even if there is a recession, there are a lot of differing, and I did a lot of reading and I couldn't get to any one consensus on it. Everybody has different views. Some people think that it's still possible even though the indicators are strong. Some people are thinking, yes, maybe this year, maybe next year, and depending on the election as well, things could change. So some of the factors, global economic slowdown and that is already happening, and I'm not going to go into that. Trade war, so the tariff battle with China has been on and off, and it really hasn't impacted earnings for companies so far, according to the data. So probably not, at this point, there's not anything in the future that will be impacted in that respect. And then there is a high potential for a trade truce. And is there one already? I'm not sure. I think there was one. Yeah, there's one in progress at this point. Stock market is expected to keep strengthening through 2020. And the presidential election. So just an interesting fact, since 1952, the Dow Jones Industrial Average has climbed 10.5% on average during election years when a sitting president has run for a re-election. Okay, does that make sense? And that makes sense to me because you have a sitting president who has control over the some of the economic has some of the economic controls, and they're going to want to make sure that the economy stays strong, right? And our current president does have that's one of the main points is a strong economy, right? That he has in his corner. So of course President Trump is not going to want it to go down anytime soon. Yes. People talked about, and the inverted yield curve is another one, and I don't go into that here, but there is some talk about the inverted yield curve as a possible issue as well. So I will, but yeah, I didn't want to go into that because I'm like, I have charts and things printed up, but I just thought it might be a little much. But
I don't think anybody knows.
yeah, I think ultimately, I don't think anybody really knows, and that's what I'm saying is that I've read, so people talk about the inverted yield curve. Some people will talk about consumer confidence, that when it's super high, and there are charts that I don't think I included here that will show consumer confidence just shooting up, and then the recession hits, and then of course it comes shooting down. Consumer spending is a huge issue right now, and consumer debt. And so some people are thinking that probably will be what triggers a recession, if anything. So there are just so many different things. And geopolitical crisis, which is who knows what will happen, any day. Other indicators, so these are some of the main indicators that people look at. The consumer confidence, which is still high. Unemployment levels, which are at 50-year lows. And then the gross domestic product. And Fannie Mae is reporting the full year growth for 2019 to be at 2.4%, and then forecasting it to be a little bit lower at 2.1% due to consumer spending. So the thought out there is that consumers are feeling good. They're still spending money, and so we'll stay strong for a while. That is adjusted for even with inflation. They I think just take that into account. So this is a really quick one on the GDP, on our gross domestic product. You see down here just kind of going up and down, and then you have the levels. So I kept this in here, but I cannot explain this chart to you. I'll just tell you up front. It's in your slides, but it's just to let you see what the trends are here. And then the U.S. unemployment rate, so basically since the recession, which is at the beginning of this chart, we've seen the unemployment rate just go down and down and down until they say here 3.6. I see other places where they say 3.7% for the U.S. And then again, the GDP. So besides 2008, 2009, where it had dipped, we've been pretty steady throughout. Factors impacting California real estate, or real estate in general, but especially California real estate: inventory levels, which we've already talked about, which are low; mortgage rates, which are also low. So affordability levels, and I'll go into that a little bit more. And then California out-migration. So we are seeing a migration of people to different states and out of the area here. Homeowners staying put longer, which I'll go into, and then construction not being able to keep up the pace with jobs out there. So this is affordability, the affordability index, which is the percent of people able to purchase a medium-priced home. Okay, so remember California, remember our area. What is our median price, sale price here in December? Do you remember? 1.475, right, percent. And then in California, the median was at 615, so 610. So the percent able to actually purchase a home now in different areas, you can't see it, but San Mateo is so this is, what is Mono? Santa Cruz is the second one, San Francisco, San Mateo, Santa Clara, Marin. So we're right here. Alameda is right here if you're interested in the East Bay. So we're less than 20%, and that makes sense. I read somewhere else, first-time home buyers, the majority of first-time home buyers, I think it was a 32% needed help from a family member in order to be able to buy a home, because there's just no way to be able to do it on their own. And that also makes sense considering the prices. More sellers are continuing. I mentioned the out-migration. So more sellers are continuing to move out since 2005. So this 2005 column shows, people who moved to the same county. So where was their new home? So in 2005, it was 38%. 2019 stayed about the same at 35%, but it was in the 44% in previous years. People going to another county went to 23%, and then it's come to 20%. Another state, people are going to about 30% of people going to other states, and then 40% we're not sure. So that's just, it's continued to stay the same. In the middle years, more people were staying put, but we're seeing it increase again to 2005 levels. It's interesting because I've been meeting a bunch of homeowners in the last month or two who are thinking about selling their home in the next year or two, and they have been moving to Michigan, Minnesota, New Mexico. I would say about 4 out of the 5 are all moving to a different state, not even just a different county. So it's a very interesting phenomenon that we're seeing. Sellers staying put. So this is what is the average time that somebody stays in their home before they sell? So going back to 2005, in general, the rule of thumb that that I was always told was between 5 and 10 years. That's about the general time, or maybe 7 years, where somebody might be ready to transition out to something else. But that average, as you can see, has slowly grown over time. So this is 2010, and you've seen it going up and up and up. And then now 2018 and 2019, it's 12 years, 11 years that people have been staying in their homes longer. Any thoughts as to why that might be? Yes.
People getting more conservative?
People getting more conservative, for sure. After the recession, I think that definitely has a lot to do with it. People they're not just ready to hop out of their house and buy another one. So any other thoughts about that? People are having a hard time finding a place to go to. I think that's the other thing. So like we mentioned, if somebody, so I have clients who, at the beginning, when the clients who purchased in 2008, 9, I was able to help them, sell that house and move to a new one and move to a new one. And now it's getting to where, I will talk to people who say, oh, I want to sell, but I don't know where I'm going to go, right? So we're seeing people who are ending up staying in place a lot longer than they used to. So that contributes to, again, lack of inventory, because if, people are not selling as often, then you're not seeing those houses on market. New jobs versus new construction. So the darker bars on the left of each represent the new jobs that were created. And then the bars on the side, on the right in green, are the permits, so new construction permits. And so new construction has actually been not too bad in our area. So in the Bay Area, there were 183,000 new permits. New construction permits out there, but there were 845,000 jobs created. So huge, huge gap between what's created and what's needed out there. And there's a whole discussion, which I will not get into tonight, about why that is for California, but California is actually known to be a very difficult place to be able to do new construction. So